Okay, guys, now we're going to move into problem 9-3B, and I apologize if you heard my dogs again, but I've tried this video 3 times now and they keep barking, so I put them outside and we're going to try it again. When you get paid, certain things come out of your check, and then certain things also are paid by your employer. And so the way, and I'm just trying to get some headings up here so when we start working on this, we can move right along through it. The way that Social Security tax works, and I think everyone hopefully knows what Social Security is. When you reach a certain age, if you've paid in, then you can earn Social Security, which is the government's version of retirement. It's not a lot of money, but it's enough to survive on, is what I've been told. When you are an employee and you get paid X amount of dollars, then up to a certain amount every year, you have to pay 6.2% of your money to Social Security. So in theory, you get that money back someday through your retirement. The maximum base, meaning the most that you have to pay that percentage on, is $117,000. And we have 4 employees. We'll use these again, Ahmed, Carlos, June, and Marie. So what we have to do every time there's a payroll, now like I said, if you're using a software like QuickBooks, it keeps up with this for you. But we're going to learn how this works. And so we're going to have to calculate that. So through September 23rd, Ahmed has earned $115,400. Carlos has earned $115,485. June has earned $6,650, and Marie has earned $22,200. So what we want to see is how much they still owe tax on for this year. And so the yet under maximum is what we're going to call that. We can fill that across. And then we want to look at how much they earned this week. And that information is given to you, $2,500, $1,515, $475, and $1,000. And then we determine how much of that is subject to tax. So Ahmed hit his limit, and so only the first $1,600 is subject to tax. And then for his paychecks moving forward the rest of the year, he won't owe anything on that. And then Carlos, ironically, it's the exact same amount. June hasn't hit her limit yet, nor has Marie. And so that amount is going to be subject to tax for each one of those. The tax rate is 6.2%. It's been that same percentage amount for many, many, many years. I don't know of any reason that will change anytime soon, but it could. It's set by the government. And so we multiply that out, and now we see that Ahmed is going to owe $99.20, Carlos $93.93, June, and then Marie, and you can see how much they owe. That comes out of their check. That's the employee FICA withholding for Social Security. Now also, each employee has to pay FICA withholding for Medicare. Now for Medicare, there are no limits, and so we don't have to figure out how much they've earned so far because you pay Medicare on all your earnings. And so earned this week, we can just go ahead and copy from here, and using cell references, copy that across. And the tax rate for Medicare is 1.45%, and just like Social Security, that hasn't changed. And then it's just a simple calculation. So this $36.25 for Ahmed, $21.97 for Carlos, and so forth. Again, those are employee taxes. Those come out of the employee's check. Now, also, the employer has to pay. And I just realized I'm not numbering these, so let's go ahead and number just so you know what I'm working on. Okay, so the employer. So if Walmart, for example, is an employer, Southeastern Oklahoma State University is an employer, they have to pay Social Security and Medicare as well, and it's a matching amount. And so this is the same as the amount from number 1. So the employer has to pay the same amount as the employee for Social Security and for Medicare. So in addition to paying wages, the employer has to pay payroll taxes as well, and that's one of them. Social Security and Medicare. I guess it's two of them. They're both part of FICA. In number 5, they asked us to calculate the federal unemployment. Now, this is an employer tax, and so the employee doesn't have to pay this, just the employer, and there is a limit, just like with Social Security. So we have to look at earned through 9/23, yet under maximum. Earned this week, subject to tax, just like we did before, tax rate, and then federal unemployment tax. And so the maximum base for federal unemployment is $7,000. And then from here, we should be able to go ahead and calculate all of this. We'll see if this works. It might not. So this one, anytime we have a negative, we've got to put zeros there, and this didn't work either. So I'll have time to mess around with that and figure it out later, but for now it just saved us some typing. So for Ahmed, we do not owe any, so 0. For Carlos, and we could set up a formula here doing an if-then, and we can make this work, but for now I'm just going to fill the numbers in. This is in an Excel class. This is an accounting class, and so the federal unemployment rate is 0.6%. It's not very much. It's the same for every employee, and then we just simply multiply those together, and we see how much federal unemployment we have to pay, and typically, I think always, it's in the quarter. So for this quarter, for this payroll, we owe $2.10 on June, and the others we have already paid the maximum amount. State unemployment, very similar. In fact, I think I can, what do they tell us in the problem? It's the same limits. And so on this one we can say, and that's not always true, every state's different, but for this one they're going to make it easy on us and say that it's the same amount as subject to tax from number 5, and so we can just cell reference that. And then the tax rate is going to vary not only by state but also by employer based on your history of unemployment claims and the age of the employer, or how many years it's been in business. That didn't really make sense. Okay, and so the state unemployment tax again has the same limit, and so we only owe that on June. Then it asks us to calculate, I'm going to move over here so we can kind of see some of these numbers, but it asks us to calculate in number 7, it asks us to calculate each employee's net pay. So net pay is how much you take home, how much you actually get paid. And so we start with our gross earnings, and then we take from that our FICA, Social Security, our FICA Medicare. Now, withholding taxes. There's federal and state unemployment in Oklahoma. I'm sorry, federal and state withholding in the state of Oklahoma. In the state of Texas, there is no state income tax, but there's still federal income tax. If you live and work in the state of Texas, you don't have to pay state income tax. So gross earnings, we were given that information over here, so we'll copy that over. Well, that didn't work. I think I accidentally hit a button I wasn't supposed to when I was copying that over. So we'll just do cell references here so that we can get all of our employees across there. Okay. So then less our FICA Social Security, and we calculated that right here. and then less our FICA Medicare. We calculated that right here. Now, withholding, you have to use tables based on the employee's status, single, married, how many exemptions they have, and so forth. When you get a job, you fill out a W-4 form where you indicate to the employer how much you want them to withhold. In this problem, it was given to us. So it was 198, 182, 32, and 68. And then health insurance was given to us as well. It's $25 per pay period. And so our take-home pay is our gross pay minus our FICA Social Security, minus our FICA Medicare, minus our federal and state withholding, and minus any deductions such as health insurance. And then that's how we figure out how much money the employee actually takes home or gets paid. Then the last thing it asks us to do is calculate the employer's total payroll expenses. So we know that we would have to expense our gross earnings. So we know we'll have to expense that $2,500. And then in addition to that, the employer has to pay matching Social Security, matching Medicare, federal unemployment, state unemployment. They usually pay a portion of your health insurance if you're an employee. And then hopefully you work somewhere that also has a pension contribution, which supplements Medicare. I'm sorry, not Medicare, Social Security. And so just like before, it's matching. And so we can come over here and cell reference our calculations from before. Move this over. Go ahead and fill these over. And then our federal unemployment, we can cell reference that as well. And our state unemployment, we can cell reference that. And then our health insurance, I believe, was $25 per employee. So we're paying half and the employee's paying half. Pension contribution is 5%. I'm just going to go ahead and type the numbers in. I can calculate it, but I think it might be easier just to do this right now. And then we'll fill this over. And the total expense of having an employee is a sum of all of these numbers. So when your employer pays you $2,500, it actually costs more than that. And one thing they left off here was workers' compensation. That's another employment type tax that employers have to incur on their employees. So that it takes care of problem 9.3b. The next one that we will work together is 9.4b, and that'll be on the next video.